So I would say over the last 2 decades, we've owned maybe perhaps 7 or 8 kind of legacy investments that we've really, really liked. And 2 of those 8 have been relatively recent divestments, 2011 approximately, 10, 11, because of both resilience to alternative outcomes and lack of understandability on our part. And one of which is Larsen & Toubro, which is a very well-respected engineering company, heavy engineering businesses, a whole host of. And the other is Siemens, the Indian listed entity of Siemens. And in both cases, we thought we understood them. And that's, understandability gets kind of compromised in hindsight. Resilience to alternative outcomes gets compromised in hindsight. When we owned them, we thought that they were great. And so the natural result for us has been to kind of increase the threshold that we assign to India in terms of understandability. So both are great examples of businesses we thought will do well given the kind of infrastructure focus, the capital cycle, the investment cycle. However, we fail to recognize how that can stall, and if that stalls, what the real impact can be, both in terms of fundamental performance and on market sentiment. And so we've steered clear of the businesses that are more kind of sensitive to that. And so I would say out of the 6 kind of key criteria that we have in place that we look for, I would say 1 is understandability, 2 is the moat, 3 is a great capital allocators. These are generic, right? These are fair for all parts of the world. The other 3 though are as important elsewhere, but have a special emphasis given the context. And those are perhaps scalability, because a lot of what we're buying into is the idea that per capita consumption of every product category is to scale. And so that's the most tangible opportunity. And if we were to straddle that with nets or with special situations, and I don't think we'd be good at it. Specifically us, because we're not good at those kind of opportunities in any case. The 5th is alternative outcomes, and that's so crucial to the Indian environment because so much is uncertain compared to, for example, the political party that comes in power in the West has some kind of degree of relevance, no doubt, but it has a far higher degree of relevance in an environment like India, right? A terrorist attack has a far higher degree of relevance in an Indian context, whether sentiment or fundamentally, however we want to dissect it. Those are the things that kind of hold higher sway in that kind of environment. And so, understanding resilience to alternative outcomes has been a very crucial element. So financials, I think, rank very high, and of course consumption kind of businesses rank very high on those 2 aspects. So because we've kind of increased the threshold for those 2 areas because of tripping up on those aspects earlier, the natural kind of businesses that we tend to like come from here. But that's not to say we wouldn't look at businesses from other areas.